Hey everyone, it's Josh Brown. I am here with Bill Capuzzi. Bill is the CEO of Apex Clearing Corporation, a prominent provider of digital clearing and custody solutions. Bill, so good to see you. How's everything?
Good to see you, Josh. Thanks for having me on.
How are things? All good?
Life is good. We have 4 kids. I've got the first down. One graduated, so 3 to go.
Congratulations on that. Bill, I want to give people a little bit of an idea of what Apex does and its role in the ecosystem. My understanding is custody, clearing. You've got all high-tech, cutting-edge customers like SoFi and Webull and eToro, and you are the fintech's fintech. You are the tech stack for some of the biggest consumer and business-facing names in brokerage. Do I have that right?
Yeah, it's about right. I started my career on Wall Street a long time ago, late 90s, at a firm called DLJ.
Yep.
For those that remember the firm. Amazing, investment bank. One of the things that they owned, which not too many people knew about, they owned this company called Pershing, which was this custody clearing. It was kind of the OG of clearing firms way back when. And I was part of their MBA program, and at the end of the MBA program, they sort of place you somewhere. And so all my friends were going into distressed debt, trading, and investment banking. I got sort of banished to Jersey City circa 1999, which is not what it is today there at this firm called Pershing. I remember thinking, like, what did I do wrong to put me in the spot? I ended up spending 10 years there, and what I learned is amazing firm, amazing people. Eventually got bought by Credit Suisse, and Credit Suisse sold Pershing specifically off to Bank of New York. Yeah,
exactly. They're still there. I visited Pershing in Jersey City 5 years ago. Still there.
Here's the difference, though. Like, you could actually go out and grab a cup of coffee or have lunch. Back in 1999, you had to run to your car.
Yeah. All right. Shout out Jersey City. But so you learned a lot about the guts of brokerage and custody and clearing and the technical side of how all these things work. Fast forward to now, where you are doing that technical work much faster and much more efficient than it was in 1999 for.
I always love to talk about it, sort of use an inchworm as a good analogy, right? So I think the industry, we work in the advisor side, Josh, you and I, and there's Michael Kitces has this placemat that he puts out of all the different firms that are involved in sort of helping advisors. And if you look at that placemat, I don't know, 90% of the firms on there, and there's hundreds and hundreds of firms, are focused on the front office. Okay, how do you open the UI experience, the portfolio construction, the CRMs, and then when you get to the back, right? There's only a few of us. I mean, think about sort of the back of the inchworm, right? Is it's Schwab, it's Fidelity, it's Pershing, it's Apex. There's a handful of others that are out there, and what I learned back in my days at Pershing is that there's a better way to take the back end of the inchworm and move it forward, which is using technology to make it such that you can open an account in seconds. Like, what a novel thought! Open an account in seconds.
So when an enterprising company that is customer facing in finance wants to be able to do something that is somewhat futuristic, given where the technology is now, you are among the firms in that conversation. Hey, we can build that. We can help you make your client experience faster, better, stronger, et cetera. Right. Okay.
Yeah. So we started way back when, and you mentioned some of the firms, right? The Robinhoods, the Wealthfronts, the Betterments, Scottrade. Anybody who was trying to do something disruptive in the space, in this world of investing, by and large used Apex, right? Fast forward SoFi and Stash and Webull and eToro. And what they need is a partner, obviously, is going to do the right thing, follow all the rules, dot all the I's, cross all the T's from a regulatory standpoint, but provide a chassis that allows you to open accounts, fund them, trade, send confirm statements, do all that stuff in an incredibly efficient, time-effective way. And so we took that same thing that we kind of did for fintech and are now applying it more to the advisory front.
So we're definitely going to get there. I want to start with some recent news about stock rewards. So this is an area. So the concept of stock rewards is basically consumers, people watching the show right now
Yep.
are buying products from companies all the time, whether it's Starbucks or Target. And what an interesting thing where not only can they make that purchase, but there's some sort of a mechanism by which they can simultaneously become investors in that
Right.
business. And I have been doing that myself forever. So if you look at
Yeah.
my portfolio, so many of the companies in there are companies that I spend money with all the time, but I didn't get any kind of rewards. I just bought the stock myself. Tell us
Yeah.
about stock rewards and
Yeah.
what
Sure.
Apex is doing in that area.
Yeah. So, look, think Peter Lynch, right? Invest in what you know, invest in what you sort of, believe in. And this notion of, okay, you're on Amazon and you buy a pair of Lululemon pants, right? Lululemon is a public company. Why couldn't you get back? Why shouldn't you be able to get back instead of points or some sort of rewards program? Why wouldn't you get stock back? Right. In the case of Amazon, is a good example. It'd be like, hey, how can I get stock in Amazon as the company that's providing the service, or individually, can I get stock back in the actual product that I'm buying on Amazon? Right. Think
Okay.
Home Depot. You walk into Home Depot, you buy stuff to improve your house. You get 2% back in stock in Home Depot.
Oh,
And the notion there, we have a patent on the sort of the chassis around this thing. It's really simple. As this B2B company, which Apex is, a company can come into Apex. Let's just use Amazon, or we'll use Home Depot, and we can provide the ability for someone that walks in, swipes their credit card, buys some lumber, to get 2% back on whatever they acquired in an Amazon or a Home Depot.
right.
Put that in an account that's in Josh's name. And to your point is, all of a sudden, you effectively, over time, you don't change your habits. You just go out and live your life. Next thing you know, you have 10 stocks that are the brands that you use, that you believe in,
Yeah.
and you're actually acquiring and accumulating more stock over time.
So I think this kind of thing really resonates with the next generation of investors because they kind of have had a front seat to watch enormous amounts of wealth be created, and they kind of have this idea that, well, isn't the smart thing to do to be a shareholder, not just be an employee? And that kind of thinking was maybe not as prevalent 30 years ago, and now to this generation, it's really obvious. So you guys have a patent specifically on the API itself. I'm gonna quote a recent article. You said the patent filing was done quite a while ago, and we have been doing this and offering it as a service for a number of years. But effectively, a stock rewards API, which is the thing that won patent approval, allows any Apex customer to adopt stock rewards programs. That's a win-win for consumers and retailers. So I agree it's a win-win. The retailer brings the consumer closer to them by making them a shareholder. The consumer gets something back for having patronized that business. What's the mechanism by which that API enables that to happen for the investor? What does it look like?
So I think there's kind of three flavors. I talked about two of them, but I think the one that's probably the easiest is your firm, right, could do this, right? You offer a card, a debit card. They walk in, they swipe that card, and that card effectively connects into this brokerage account. So long as the vendor, if they walk into Starbucks, participates in the program, we'll effectively take 2%, buy the stock as a fractional share. I mean, talk about why, okay, there's a lot that had to happen to make this happen, but you're talking about 2% of a $5, you buy a cup of coffee for $8, you get, whatever, 2% back. You're talking about cents, right? 50 cents a stock. And you have to have this platform that allows for people to accumulate 50 cents of stock, right? Which is a fraction of a share.
Fractional share trading is what enables this.
And you have to have a chassis that allows for an account that has very little amount of money, but over time will accumulate to actually be something that works. And that's kind of where the focus for Apex has been historically. So that's one is like a firm like yours offering a debit card. The second, which really hasn't taken off yet, but this notion of these e-commerce brands, right? So I keep mentioning Amazon. Like Amazon should do this, right? Without going into a lot of detail, they're having a lot of conversations with them about offering something like this. The challenge for an airline is a good example is that, their point system works or doesn't work, right? However they want to look at it. The concern for many of these e-commerce companies is they're now the good news is they're turning a consumer into a shareholder. The bad news is they're turning a consumer into a shareholder in that they now have lots of small retail accounts that are on their books. And the risk is that if the stock goes down, right, those same people are looking at this company maybe.
I was going to ask you what would make a company not want to do this? Is probably something like that.
Well, the sad part is, too much about the plumbing in our industry, but, small retail clients aren't necessarily great for these companies because it costs them a bunch of money to send out prospectuses and the proxy statements. It's a whole different part of our industry that has to be overhauled. But when you talk about small accounts, typically, the public company doesn't necessarily want the smaller clients on their books. So that's one negative. But the consumer into a shareholder, as that notion of turning, like you talked about yourself, Josh. Like I invested in the things that I care about in my life, and this gives people an opportunity to do that without actually changing and have to open an account and get into brokerage. They just live their life. They swipe this card, and next thing you know, they got stock in an account.
Well, to be clear, the entity, the corporation, is not hosting the brokerage account or at all involved in the brokerage part. That's a connection that's being made via your API. So Delta doesn't end up with small shareholders necessarily on their books, although every corporation has the same responsibility to notify clients, and they typically do that via brokerage channels.
That's right. So that notion of the APIs plugging into one of those platforms and then partnering with a firm like yours and saying, hey, look, you can support the end customer, right? Or any other brokerage firm can support the end customer, or Apex directly, which will offer that. They don't have to get involved in the regulatory world, and it's kind of a win-win for them. Back to the point about turning a consumer into a shareholder.
Well, I would say in this day and age, and this new generation of investor or consumer, they're the same people. They do care about who they're giving money to. They do use their purchases to signal their feelings about. And as we're recording this, I'm watching shares of GameStop up 30%. A lot of the meme stock stuff is predicated on this idea that short sellers were somehow hurting businesses that Gen Z and millennials care about, like the movie theater, like the video game store. A lot of this is just gambling, but some of it is affinity for the underlying company. And so there is a connection between the stock and the investor in that stock also being a consumer of that business. So making that like a full circle connection is really interesting to me.
Well, think about it, Josh. I mean, the fact that, let's just take GME or AMC, which is also flying today. The fact that these stocks can get moved by retail investors, 10 years ago wasn't really the case. You didn't see this movement. And the cool part is why I'm proud of what we've done as a firm is there's 22 million end investors that use Apex today. And you kind of lowered the barriers and you gave people the ability to open an account and invest with small amounts of money. Yeah. And, if you're talking about, tens, hundreds of millions of people, you think about the Robinhoods and Apexes and some of the other firms. You provided this kind of next, like you said, this next generation access that was a lot harder, 10, 15 years ago than it is today. And they're showing up, right? In the case of GME, we've got roughly, about 150,000 people on our books that own shares in GME. The activity in GME over the course of May was up 3,700%.
Yeah. So leading up to what we're seeing today, right?
Yeah. So leading up to today, exactly.
Yeah. Could you envision a scenario where a company finds that there's more loyalty from the consumer who's a shareholder of theirs via stock rewards? Is that something that you've seen already, or you think could at some point materialize when enough people are enrolled?
Yeah. So there was a study that one of our clients did with Columbia University, and what it showed with some of the brands is that moving from a consumer to a shareholder increased loyalty within that brand by roughly 100%. A small-ish sample size, but 100% increase in loyalty. So this notion of turning a shareholder, a consumer into a shareholder, is incredibly powerful.
So
Right?
you could
The challenge is, yeah.
I was going to ask, you could have someone say, well, Target is now a company that I'm invested in. Therefore, if I'm choosing between making a purchase at Target.com versus Walmart.com, it's an easy decision for me.
Yeah, because you're like, hey, look, I have this account. I've got this stock in here. The last time I looked at it, it's up 22%. Like, wow, this is actually real.
Yeah.
It's working. This notion of turning it, this 2% instead of some weird points. I mean, I fly a lot, which I think you do as well. I get points in the airlines. It's hard to use them. They don't really work that well. If I had the option of, instead of taking American Airlines points, taking stock, I would do that all day long.
Okay.
Right. And it probably, think about yourself, like it would turn you into somebody that was like more connected to that company. You now get the proxies. You're now looking at stuff about that company that you wouldn't be looking at as a consumer only.
Well, I think if this ends up being successful, it could be the case that some people's first stock purchases ever, anywhere, happen as a result of stock rewards. But that's your job, I guess, to make it easy enough that people who are not well versed in how the stock market works get the concept, and they're able to translate their spending into becoming shareholders. But that's the hard part, I guess, that has to be figured out so that it's so seamless that people don't have to feel like intimidated. I don't understand the stock market.
That's right.
So all right. So that's what you guys are at work facilitating right now.
Yeah, it's one of the things, right? Remember, we're a platform, right? So go back to this B2B platform. It's just an easy way to provide a different, like you said, different venue to allow for retail investors, whether they're coming via an advisor or they're coming direct into the market, to create more connection, to create more sort of loyalty into either the advisor or the brokerage firm or that brand.
I love it. I want to ask you about T+1 Settlement. So last week, for the first time ever, U.S. stock markets moved from T+2 to T+1. For those who are unaware, T+2 means trade date plus 2 days for settlement, which is effectively how the machinery of the market decides this transaction happened. This person sold at this price to person B who bought at this price. And we moved from that being, since I started my career, I think I started at T+3. I'm not 100% sure. But then since 2017, it's been T+2. Last week, we got it to T+1. What are your thoughts on what investors should know about that? Yeah. And how long do you think we go at T+1 until we go to instantaneous?
Yeah. So first, the move from T5 to T3 happened in 1995. For my career, probably before yours.
That's just before me. T+5. Wow.
Yeah. T+5, and that doesn't include, by the way, the weekends. That's T+5 business days. Yeah. Okay. We moved to T3. The interesting thing is, and this is one of the first things I did working on Wall Street when I was at Pershing. There was a big push right after Y2K to go to T+1.
Yeah.
And if not for 9/11, that the path was to get to T1. This is almost a little over 20 years ago, and it took us better part of 20 years. One, to take this starter step to T2, and then eventually get to T1.
We got to decimalization right after 2000.
That's right.
That was a huge deal, going from eighths and quarters and sixteenths to decimals, and that did have some ancillary effects on
liquidity. Yeah.
Okay, so this was on a much slower track, but we eventually. Okay, Go on.
So here's what I'd say. I'm on the board of DTCC, which is sort of that body that sits within the industry to sort of be the sort of central clearing hub across the entire industry, right? And so the buyers come in, the sellers come in, and they net inside this thing called DTCC. So that DTCC was really the driver to sort of the impetus pushing for T+1 with the SEC sort of mandating it. So Frank LaSalle is the CEO of DTCC, and his team did an amazing job, getting us there. With that said, so the good news is you're right. So today versus last week, you buy a stock, tomorrow you own the stock. It's in your account, right? And let's use the other one, right? Which is you own stock, you sell it. You have to wait until tomorrow to actually get your cash.
Right.
And let's go back to the T+5. You imagine, right? Through a weekend, it used to be where you sold stock, you wouldn't get it 5 business days later.
Yeah.
So like you couldn't do anything in that time frame with that money.
I was a retail broker during a lot of T+3, and you sold the stock, clients wanted to buy the next one, and sometimes you couldn't move that quickly, or you would get a violation if you tried to move through settlement. So it was a real issue that did hold people back from being able to do what they wanted to do.
Yeah. So the good news is, hey, we got to T1. By and large, the industry did it without a lot of fanfare. There's this affirm rate, which effectively measures how well the buy side and the sell side match up, and in terms of on trade date, meaning, do I know the buy and do you know this? The buy and the buy side, do they match up? We're at about 92%, meaning that there's roughly 8% that don't match up. That's amazing compared to where it used to be on trade date. You asked a question about going to T0, and I'll give you my 2 cents. And it's actually one of the things I'm pushing on DTCC on. Take the world and separate it, Josh. You got your institutional business, right? So you have big buy side. Think Wellington buying a block of stock for a million shares of GME, right? They send that order to Goldman Sachs. Goldman Sachs executes that on what's called RVP, DVP, right? That is very different than Josh Brown wants to buy $100 worth of stock.
Wait, right? why can't Josh Brown buy the million share block?
Well,
in your example, okay, go on.
But on the institutional side, I think we're going to have a really hard time getting to something less than T+1, largely because the infrastructure amongst the banks. We're not talking about DTCC issues, but you're thinking like Bank of New York and State Street and like these big banks that are sitting on batch processing, right? This COBOL code, IBM mainframe. And so this notion of moving that to something less than overnight is going to be a massive overhaul, massive overhaul, right? For retail though, right? So let's just take Apex. I could settle, you have an account on my books, you have money in the account, you can settle that just like a cryptocurrency immediately.
Yeah.
I kind of sit here and twiddle my thumbs and wait for the industry to settle tomorrow, right? And I don't think I'm representative of all the retail brokerage, but at least at Apex, I could settle a trade immediately.
Okay.
The industry is not ready for that. But it should on the retail side. I'm pushing very hard, seat on the DTCC, but also from an industry standpoint to say, retail, why are we waiting? If I have cash in the account and I buy something, why don't I have it immediately?
Broadly speaking, do you think the stock brokerage machinery, maybe to a lesser extent bonds, but do you think the stock brokerage machinery is being influenced by the crypto markets, given how that settlement is instantaneous? It's largely done via blockchain. Do you think there's like an influence coming from crypto?
No.
You don't?
I mean, there was. I'll tell you, so back, let's rewind the tape, 2020, 2021. I call that the sort of gold rush of retail. There was a lot of mixing and people were doing both. And then there was like, okay, you would sell crypto and use the proceeds to buy stock and vice versa. So there was a lot of push for like, hey, why does this work this way?
Yeah.
But you got to remember, The other side of that, though, was we also had a lot of fraud in crypto.
Yeah.
Right. All that happened in 2022.
But it was like fun. It was like fun fraud. No, I'm just kidding. No, I'm just kidding. It seemed fun at the time. It was fun until 2022.
Yeah.
Right.
Yeah.
Okay.
So I can tell you, just sitting in my seat, that's not a big driver. It's really interesting because of the SEC, because of regulators, they've kind of pushed the two aside and said, okay, you're going to go right for your crypto and you're going to go left for your brokerage. And this commingling really doesn't happen.
I asked that question because when I talk to very young traders, like people who started in the last 3 years, they talk about crypto assets and stocks interchangeably as if there is no difference. And that's going to be a great segue to my next question for you. We are now hearing increasingly about experiments in 24-hour trading.
Yeah.
And that's definitely a crypto influence. So just to back things up, we've had late night, we've had aftermarket trading for a long time. I remember the early days of Instinet. And, now that's kind of a standard thing where both retail and institutional can get trades off in the pre-market, in the post-market. But to my earlier point, someone who's 22 years old and started trading 2 years ago probably doesn't understand why some of the assets they're trading are 24-hour markets, whereas stocks are during this proscribed period of time that's specific to the East Coast of the United States of America. And why they can't affect the trade on a Sunday night in their stock market holdings the way they can in their crypto holdings. So what are your thoughts about whether or not that's coming?
Yeah, we launched 24/5 earlier this year. And the notion there is, okay, we'll get to the weekend. We're actually working on that. Hoping we'll launch something by the end of this year on the weekend.
I need to lose money 7 days a week. This is very important to me. Go on.
But think about, so here's what I'll tell you. So I got a 22-year-old son, like I said, just graduated from Tulane, and his friends and him, they don't think like I did when I was his age. And again, I think it's cool. We lower the barriers and these kids can actually invest in their future. And so they're out to dinner and they're talking about a certain stock and they're like, why can't I just press a button and buy it now?
I guess I'll buy it at 9:30 tomorrow, or I'll buy it Monday.
Right. Right. And then if they forget about it. And look, I think from that passive investor, the casual investor, the delta when you're talking about, okay, the bid ask spread and like, what's the spread and like, what's the slippage? It doesn't really matter in the long term.
No.
So that's one thing here in the States. The other thing I'll tell you is that today, the 24/5, right, the stuff that Apex supports in the industry is almost entirely, I mean, there is some activity here in the States, but a gigantic portion of it is coming from Asia. Josh,
do they have overnight markets or 7-day-a-week markets in Asia yet? Are there any areas of the world that have this?
No, they don't. Here's the thing. It's like you're in South Korea. There's 3 stocks that you can trade in South Korea, right? It's a small market. It's a tiny market. They want to trade the U.S. market, and they don't want to be up until 3:00 in the morning, their time.
Yeah.
So this notion of 24/5 has been a gigantic win for these folks to be able to trade during their day. And they don't care about that slippage. Back to the long-term investing.
Is that happening in reverse at all? Are U.S. investors trading Samsung?
No.
Not really, right? Okay.
No.
So that's all really. One way.
Remember, some of the bigger names, you got to remember, bigger names overseas, U.S. market smart, they create this thing called an ADR.
That's right.
Which trades in the U.S. market almost in parallel with that name overseas.
Okay.
So most of the world wants access to the U.S.
How much do prices move at 2 a.m. New York time? Like, is there like an issue with wild prices because there's not much liquidity, or how do you think about that?
Yeah, there's still a lot of room for us to get this even better. The price formation is tricky, right? If nothing's going on, which typically it's not, it's going to trade around, people's interests. If there's demand, it's going to push the stock up a little bit. If people are selling more, it's going to push it down. If there's news that comes out, Elon Musk tweets something in the middle of the night, right? That's the tricky part. And at least for now, what happens is you just pull the quote, right? You sort of stop trading in that name in the overnight.
Okay. If something happens, but somebody has to make that decision.
That's right. So you have market makers that are smart market makers, right? Likes of the Citadels, the Virtus, Peak Six, firms that are making markets and looking at what's happening. Right. The problem is that there's not price formation at 2:00 in the morning.
Yeah.
Right. And so the risk there is that you could get stuck with a fairly large position in something that moves adversely against you, at the open.
If you're an institution, can you designate? I have a sell stop limit in place on 1 million shares of Tesla. I do not want to trade outside of 9:30 a.m. to 4 p.m. You can do that to protect yourself from having like a limit triggered somewhere.
And most of them are like that. Most of the people that put in a limit order, even if it's a GTC, they're not flipping into this overnight, right? Until there's more liquidity. I do think part of the reason is, you think about it, people want to go home at 4:00, right? So you think about these big asset managers. Who wants to be watching the markets at 8:00 at night?
Well, that's the thing. That's the number one thing when I talk to financial advisors. There's not a lot of excitement about 7-day a week, 24/7 trading, because that adds an extra, 100 hours of things that potentially could affect their client's psyche. So if you ask a typical financial advisor, they'd say, give us 4 hours a day. Give us 4 hours of trading a day. It's enough. So I would say, Oh, please go ahead.
Just say, if there's enough liquidity, and I think it's going to continue to grow, Josh, that those buy side firms are going to be forced to pay attention, right? Because you're going to see liquidity outside of that normal 9:30 to 4 range.
I agree. I wanted to finish by asking you a little bit about the future of Apex. So you guys at one point were almost going public, and then I think those plans were put on the shelf for good reason. The market environment deteriorated for tech, for fintech especially, but that was a few years back. It looks like as of December, you started talking about possibly going public again. Where does that stand?
Yeah, I obviously can't say too much. We have a desire to, I've got 22 million, like I said, 22 million retail investors on our books. We support roughly 200 different firms out there, and we custody the assets, Josh. And so, there's a reason to be public, which is firms should, people should know who we are.
Increased visibility will aid in your attempt to become a bigger custodian, of course.
Yeah, and I listened to you and Joe Moglia, which was a really good podcast the other day. You guys talked a little bit about custody, and the world needs a better custodian, right? And I expect it will be Apex. There's no doubt in my mind. The next Schwab, right? People listen to this podcast, in somewhere between 5 and 10 years, the next Schwab, say that in air quotes, will be Apex. And it's just very clear, right? Because I think technology needs to be better, right? We built this thing from the bottom up. We have the capital, right? We follow the rules. We dot I's and cross T's from a regulatory standpoint. And the industry deserves a better platform. Our job as a custodian is to facilitate an investor accessing an investment and then hold the asset for when that person wants to do something with it. And we think about that world today and how expensive it is, right? How many people are involved, and then how stupid some of the stuff is. Like open accounts taking 3-5 days, ACATs taking up to 8 days. Like, this is crazy stuff. Yeah. We should lower the barriers, make it super simple, right? Make it a lot more efficient in terms of the costs. That's kind of the game for Apex, all right? And this path of a public company, right? It's something we're exploring. The expectation is the markets continue to get better. We'll be in a good position.
Bill, I think that's a great place to leave it. And I think we found your stump speech. I think that's a really great way to sum up your ambitions and why it's important. And of course, if and when that happens, maybe we'll have you back and we'll talk about it then. But
awesome.
Thank you so much for your time today. I want to tell people where they can learn more about Apex and maybe follow some of the things that you have to say periodically. What's the homepage for Apex?
Yeah, it's apexfintechsolutions.com.
Okay.
And then on LinkedIn, I'm pretty active on LinkedIn, William Capuzzi, Capuzzi.
Awesome. Thank you so much for your time today, Bill, and for sharing with us. We really appreciate it. Thanks to everyone for watching and listening. Do all the likes, all the subscribes, and we'll talk to you soon.